Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at Bitcoin. So, Bitcoin showing some life this week, pumping above $30,000 after retesting the white supply trend line as support last week. If Bitcoin continues to hold onto its gains throughout the weekends, Bitcoin will have closed above all the key weekly moving averages, the 20, 50, 100, 200 weekly moving averages for the first time since the early bear markets in 2022. So much for that BS weekly death cross that got everyone to sell their Bitcoin or short Bitcoin. One note on the Bitcoin ETF fake news that happened this week. A lot of people seem to be under the impression that Bitcoin needs an ETF to go to $100,000 or $1 million to become a multi-trillion-dollar asset. What most people don't realize is that Bitcoin had already achieved trillion-dollar status last market cycle without a Bitcoin ETF. A Bitcoin ETF is just a BS proxy that just allows BlackRock and other financial institutions to print millions of imaginary shares out of the blue whilst charging excessive ETF expense fees for doing absolutely nothing. The long-term winners of a Bitcoin ETF aren't retail investors who invest in Bitcoin. The long-term winners of a Bitcoin ETF are the financial institutions like BlackRock. Just take a look at gold. Once BlackRock launched its gold ETF, gold had one amazing bull run and then proceeded to trade sideways for the next 10 years without any price appreciation as inflation soared through the roof. You were better off putting your money in a savings account earning interest than putting your money into a gold ETF for the past 10 years. And who's to say the same sideways stagnant price action won't be coming to Bitcoin as a result of a Bitcoin ETF approval? Be careful for what you wish for, because I don't believe the Bitcoin ETF is bullish for the long term as in a decade plus. Moving onwards to the Elliott wave count, it looks great. Bitcoin was able to cling on to the golden window at the 61.8% Fibonacci retracement to the 78.6% Fibonacci retracement and formed a new high above our wave 3 top in 3 waves. So now we have established a bullish impulse off the lows in the form of a leading diagonal. That being said, Bitcoin isn't completely out of the woods just yet. Who knows if this wave 5 has topped yet? I mean, it has tagged the 1.618 Fibonacci retracements of wave 4, which is a common target for a wave 5, but there are no topping signals in place for a bearish reversal. Now, let me just delete some unnecessary fibs and levels off the chart to draw a clearer picture here. Eventually, when this wave 5 top is in place, there will be a 3-wave correction towards the downside. This 3-wave correction must hold a higher low than the bottom of this wave 2 retracement at $24,900. Only if this 3-wave correction holds a higher low, we can finally get this wave 3 extension into the mid $40,000 region. Okay, so moving into the S&P 500, looks pretty bad. Can't lie. On the weekly time frame, we have a bearish engulfing candle, and on the daily time frame, we have a 3 daily black crows pattern. Not good. And the S&P 500 is most likely going to create a new local low next week. Now, not all hope is lost. We have a series of liquidity points on the horizon. The 50 weekly moving average, the 100 weekly moving average, and the 500 daily moving average, and the 50% Fibonacci retracement all coincide at $4,190. Bulls better stand strong and defend, because the S&P 500 can't break below $4,100.51, which is the wave 1 invalidation level. Even though I sound like a mega bear right now, our blue Fibonacci retracement support area that spans between $4,189 and $4,404 is still holding as support. Regardless, next week is going to be a massive week for the S&P 500. Let's see if big tech earnings can save the day. Let's look at something that isn't as depressing and actually brings good vibes here, which is the Bitcoin against the S&P 500 valuation. Starting to look really good here. Test of the historical 50 weekly moving average as support, and it looks like we're off to the races. The Bitcoin against the S&P 500 valuation also broke out of an inverse head and shoulders pattern and has retested the neckline as support. This looks absolutely ready to rip into our Fibonacci confluence target over the next few weeks. And as established in previous episodes, if the Bitcoin against S&P 500 valuation breaks out higher, that indicates that we are in a bull market, not a bear market. Let's finish this episode off with some regression. Just a quick overview. The red region represents Bitcoin's overvaluation, the blue line represents Bitcoin's fair value, and the green region represents Bitcoin's undervaluation. The basic concept of this indicator is that you buy in the green and you sell in the red. This week's undervaluation region spans from $14,859.65 to $27,402.92. And Bitcoin's fair value this week is $34,610.93. As stated in previous episodes, in order for the bull run to really kick into effect, Bitcoin has to flip the fair value, the blue line, from resistance into support. So far, the fair value for Bitcoin has rejected Bitcoin twice this year. So let's see if third time's the charm. All right, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one.